Hello, good afternoon. You're watching Closing Trades on ET now. I'm Anisha Jain. With me is Aisha Faredi, and it's back into the red. At some point of time during the day, we were seeing a bit of a green tinge on the screen, and perhaps there was that recovery which was underway. But no, that's got sold into not by a whole lot. We are somewhere in the middle of the range, but nonetheless, there is red on the screen. Back again. The mid cap, small cap, bank nifty, they were the ones which were outperforming earlier in the trading session, but that too has given up the gains at the moment, and there's a bit of a slip that has occurred in the last 30 minutes or so. So all the indices are now headed lower. Nifty Bank is just managing to stay afloat at the moment, and that's the outperformance coming from HDFC Bank today. That's holding one end. As far as the banking stocks are concerned, it's higher by almost 200 points. IDFC First Bank is doing quite well with that 4% gain. You also have Kotak Mahindra Bank, PNB, Federal Bank. They are the ones which are batting for the bulls at the moment. But apart from that, there's a bit of a glean when it comes to the metal stock. IT, however, is clearly on the back foot. So whether it's a TCS, whether it's a Wipro, whether it is Infosys or any other name from the IT pack, actually LTIMindtree also for that matter, they're all down anywhere between 2 to 3%. So very, very sluggish. And then, of course, there are individual calamities that happen to the likes of Honasa, etc.
Oh yeah, absolutely, which haven't seen any sort of sign of resurrection, also still struggling. Or for that matter, the city gas distribution companies at the lows of the day. IGL down about 19.25%, MGL getting backed about almost 15% there as well. Or for that matter, even Gujarat Gas, which is also now headed in for a good 8% of a decline. So yeah, those spaces, they continue to definitely suffer. Or for that matter, Honasa, like Anisha is pointing out, Goldman Sachs has now downgraded the stock to a neutral from the earlier buy and cut the target price all the way to 375 as well. They're saying there is a potential to ride shift towards science-based skincare, yes, but the repositioning of the brand itself and the mother brand, that is Mamaearth, is going to take time. They're saying that the revenue down has been driven by pipeline inventory correction and deterioration in growth trajectory driven by their mainstay brand, which is Mamaearth, is what they witness. So therefore, this slash down in target price. Also, one must point out what's happening within IT. While IT has been fairly resilient all through this market correction, today is not quite the case. TCS is your top mover loser on the index. It's down about almost 3%. Wipro, Infosys, all of them are sluggish in trade. Let's welcome on board our experts then and figure out how exactly to navigate this market. Got Deepak Shenoy on the fundamentals, Naresh Mirani, Kunal Bothra on the charts. Kunal, one would have thought that today would be perhaps a durable bottom, and I'm using perhaps quote unquote, but what's your sense in the Nifty?
Yeah, but I think it's a slight better day because, at least the number of stocks which are falling by a margin of 5-10% and the intensity of intraday sell-off is not as extreme as what we had seen over the last 3-4 days specifically. But yeah, I think on one hand, the indices are just about trading, closer to that 23,400 levels for the Nifty. Bank Nifty showing slight signs of positivity. But then, we've not managed to break past about the yesterday's trading high for both of these indices, for either of the indices, both Nifty as well as Bank Nifty. So I think in that case, we are still into that downtrending kind of a mode. So I think what matters over here now is that if over the next couple of days, we see two signs of improvement. One is whether the market breadth starts to improve. That's probably a sign that the markets are getting back into a zone of establishing a range for itself, and the pace of sell-off could, that could lessen significantly. And the other most interesting one is, if we manage to break past about the yesterday's trading high, because we've not seen that pattern occurring for both the Nifty as well as for the Bank Nifty over the last 4 to 5 trading sessions.
Okay, so that's the take coming in. Durable bottom is what is missing at the moment. Naresh, what's your view? This outperformance that we're seeing from the banking index, is that something which is likely to continue?
So we need to see a reversal across a few indices, the top weight. So today, for example, we are down 100 odd points. 80 points is the impact from the Nifty IT. In the same way, banking has been holding on, but we are still struggling around that 50,000, 50,400, which has been the low for the last few months. So once we see the Bank Nifty sustaining 50,800, 51,000, the Nifty sustaining 23,700, that's the price point where we say a reversal is done. In the last two sessions, the breadth is not as bad. The recovery from the intraday lows has been there. We've been having a tighter and tighter range in the last two sessions. So now we need a range reversal on the upside for confirmation. For now, selling seems to be reducing in terms of price action. But for now, we are in that important support band for the Nifty as well as on the Bank Nifty. But reversal signals are yet not confirmed.
Right. Deepak, hi, afternoon. Welcome to the show. What is your own sense? Are we close to a bottom just yet? And does it even matter after the individual stock prices, the way they've cracked? Have you already been a buyer?
Uh, Aisha, I think you can only look at tops or bottoms at in hindsight. So if I said yes, it'd probably be much after the bottom has been made. But then one of the things that's happened right now is it's not like the FI selling of the past when India's fundamentals were actually quite strong in terms of corporate earnings. This time, the corporate earnings numbers have also been a little bit weaker. We've been overvalued with respect to the rest of perhaps the world, where we continue to face relatively high inflation and also have a relatively higher PE ratio overall compared to the rest of the world. But then the growth opportunities in India are also immense. But it will take some time before corporate results start to come back in a meaningful way upwards. We're seeing a lot of disappointments in stocks that probably had run away too much in terms of valuation. So those valuations are correcting. So these stocks fall 30, 40, 50%. But you don't see overall portfolios falling that much. So if your portfolio is well diversified, has a little bit of banks, has a little bit of IT, a little bit of other industries as well, you might see some of your stocks falling 30 or 40%, but then your overall portfolio will be less than even in the PMS we run, our overall portfolio is probably down by maybe about 10% at the max, which is what the index is. So I don't feel that this is a meaningful correction yet for us to say, let's go in and just buy everything that we can. But we are adding more to portfolio positions as we see, because some of these some of the stocks, especially in the large caps, still hold a lot of value, whether it's Reliance or L&T or a bunch of others. And I think they have not meaningfully participated on the upside, but have seen a reasonable part of the downside. So it gives us the opportunity to say they will probably be good positions to pick on for the future.
Let's see, but the future seems to be a bit uncertain at the moment because the jury is out whether after this 10% plus kind of correction that we have seen in the market, are we headed lower, or is there a bit of a bottom that we will see at some point of time? But if you had to bottom fish, Deepak, would you buy into a stock like Honasa if you track that one?
So these are falling knives in that sense because you don't have all the information yet. There is a considerably high price compared to profits that have come in from the company. Even when it was profitable, the price was considerably higher. So having a 30, 40, 50% correction would almost be normal. But also remember that in Honasa and a few other startup companies, there are lots of institutional investors that want to sell. So that always provide a selling pressure to a stock once it goes past the holding periods that are minimum holding periods that are required. So I think that adds another layer of pressure to the stock. More importantly, the business itself is not giving us the kind of confidence that we could see this company being valued at 3x, 4x what its current levels are in the future. And that's why it's perhaps not such a great idea to pick it right now. Perhaps there's a better price for it at which we will probably buy it, but I don't think this is the price or close to this. It would have to fall meaningfully from here for any of these, many of these companies to come into our portfolio. I think it's better to bottom fish at stocks that haven't done meaningfully well in the last 3 or 4 years. But have now come down to much reasonable valuations. And the biggest example of this perhaps is HDFC Bank. And so it might provide a better medium-term growth story than some of the stocks that have just fallen on the basis of bad results.
Point. And I'm sure there's a longer list than HDFC Bank as well. Deepak, we'll just get back with you. But here are Hemang Jani as well and Karan Tarani on what they had to say about Honasa.
This is not like a normal consumer company, wherein there was a certain expectations of growth and the company actually delivered lower growth because of either urban, slowdown, etc., etc. This is a case of hyped expectations by the promoters, by the analyst community, and trying to justify unreasonable and very high valuations. And now there is an effort to kind of do some sort of a salvage by saying that, oh, the distribution model is not right. Oh, there is a quick commerce which is leading to some sort of a disruption. I think in a bull market, in an exuberance phase, you will find many promoters, investment bankers who are trying to push through certain themes and narratives. And this is just one such narrative. If you actually do a ground level check, I honestly don't know how many people, end up buying this kind of products at the ground level also, which requires some sort of a detailed check. So I definitely would avoid, doing any sort of, buying into this kind of companies. I think it's time to kind of do a much more filter, much more detailed work in terms of what's really happening, and then only take a call.
Okay, so that's the view coming in, and there seems to be a bit of a consensus there, both from Deepak as well as Hemang, that the full information is not out and it's a bit of a falling knife. So at some point it might become a good buy, but maybe not just yet. Let's see what tomorrow holds, whether there's a bit of a recovery from the lows or otherwise what really the situation pans out. But Deepak, we were talking about IT and the kind of slide it's seeing today. What's the view? Because, yeah, on one hand, this is one sector which is expected to go only better from here on. At least those headwinds seems to be over. It's only a question of when, 3 months, 6 months, 9 months might be the question. So are you looking at buying IT right now?
Some, Manisha, we have a few stocks in our portfolio, but I think the bigger thing is going to be about how budgets change. Now, a lot of things will change with the US administration changing. They're talking about reducing headcount in government departments. A lot of IT companies do a lot of work for government departments or through other vendors that actually produce or provide services to government department. So that to that extent, business may get affected in some way, but there may be other areas where business will actually improve because a lot of projects have been kept pending based on who will become president, because I think policies were quite radically different, especially when you're talking about one candidate was talking about taxing unrealized gains versus another was something else. So there is now a little bit more clarity in which side is going to go forward. So I think from January onwards, we should get more clarity in what part of the businesses start moving forward, and therefore which of the IT companies will relatively succeed. I would say wait for a quarter, but I'm building up positions anyhow. We're anyhow adding a little more to our IT portfolio. But that's also because we had become too underweight on it, and the stocks have fallen, so the percentage has fallen even more in our portfolio. So I'm happy to pick it back up to that percentage which we want, and then we'll see where January and February leads us. It's both Indian budgets and the US administration change that will dictate a lot for IT companies, at least from what I see.
Okay, Deepak, stay with us. Lots more to talk about. For now, we're going to take a very quick break with news that market was unable to hold on to the green. The Nifty has now dwindled, and we're back at a downtick of 0.5%.
Welcome back. A further slip in the market. In fact, from the highest point, there has been a selling of around 0.6%, but from the lows as well, there has been a bit of a recovery. So in the middle of the range, that's how you can probably describe the market at this point of time. In the last few minutes, what have been the big movers? JK Lakshmi Cement is seeing a bit of a spike. You have Varun Beverages, which has been holding out quite okay over the last few trading sessions. So these are some of the names which are spiking up as we speak. And on the losing side, Ircon International from that entire railway pack is coming under pressure. Bank of Maharashtra is down, and some other PSUs like IOB, etc., Central Bank, they're all down in the trading session. So PSU as a basket seeing a bit of a red tick. But Kunal, what's your sense as far as the cement pack is concerned? Again, one of those sectors which hasn't done much in the last couple of years, but finally any signs that it might be coming out of a slumber?
Doesn't look like, because I think most of the cement stocks, large cap names like UltraTech Cement, whether it's Ambuja Cement, Shree Cement, etc., I think many of these stocks, they've been falling below their key moving averages, and these stocks have fallen before the markets actually went to a correction. So the tops for many of these stocks was somewhere in the month of June, July. For some of them, it was in the late in the month of August, and from there on, it's been a gradual correction for these stocks. Now, the concerning part was, for the cement stocks was on the way up. when the markets were moving up higher, that was a point where these stocks underperformed, and now when the markets are going to a corrective phase, these stocks are correcting in line or more or less underperforming the overall benchmark indices. So that's a sign of consistent weakness for these these stocks within the sector. So my sense is that these stocks would continue to underperform. You might have one or two stocks which could give you those odd bit of rally, but as an overall pack, I would believe that there could be an underperformance which could continue.
Okay, that's that on cement. Deepak, while talking about Honasa, you were saying that it's better to stay put in names like HDFC Bank, which haven't performed at all in the last 3 years. You think that underperformance has played out in Reliance as well over just the past 1 month?
Oh, it's in fact terribly underperforming in that context. In the sense, it's down considerably more, I think, from its peak. But then one of the things that's happening right now is a lot of their businesses are seeing challenges in different ways. Jio's seen a reduction in the growth rate after they have increased prices. The retail business has seen a drop in general when we've seen this in DMart and most organized retail. Perhaps from the picking up of quick commerce, or perhaps from a generally lower interest in some of these elements because of fragmentation in that sense through competition. And the oil business is primarily mostly dependent on refining margins, and those margins have been volatile and not to the favor of Reliance recently. I think over time, of course, this is a cash machine. It does generate a lot of cash despite and the the retail and the geo businesses don't need as much. So I think at some point, some of the newer businesses which they're talking about, whether it is the solar and the hydrogen facilities, whether it is some of the other new ventures that they've started to take up, I think all of those will start playing a role in the longer term. But this needs at some point a demerger to happen, so you can segregate the businesses away and not have one cash flow determine the cash needs of all the other businesses. I think that would be the time at which you would value those businesses independently. Till then, we're going to have to wait and watch, how the business evolves. It's too big a company to actually just have one focus. So there are 3 or 4 different areas of focus. So no matter what happens now, one will do well, another 2 will do badly. It's not something that will kind of get the best valuation. I think we are betting on the fact that there will be a demerger or a revaluation at some point because of the individual businesses getting listed, and that's when the fortunes should change. I don't think it's particularly a bad company to own, but because of its relative size. But I think you have to be patient. We've been patient, and I think I'm willing to be patient another 5 or 10 years to let this company evolve into what I think it should be.
Point taken. So let's give it some time, and then Reliance will emerge as in its new avatar, perhaps after the demerger. Deepak, on that note, we let you go. Thanks so much for making time and speaking with us. In fact, slipping into a very short break. Don't go anywhere.
Back with closing trades right here in ET now. Let's just shift focus from the market away to the national capital, where the air quality index, or the AQI, has now plummeted to hazardous levels. In fact, it's breached the 500 mark in some areas, and a thick blanket of smog has engulfed Delhi and nearby regions. In fact, we've got Times Network's Nikhil joining us for the latest from New Delhi.
AQI today have reached to a mark of 500, and that is something which has been recorded in the station of Dwarka, and because of the same, the visibility as well has been impacted, and the impact of the same is being seen on the air operations as well and on the railway operations as well. So both of these sides are suffering because of the lower visibility. But if we talk about the overall detail as far as the capital city is concerned, the similar conditions are likely to prevail as per the authorities. And as we speak, there is also a crucial meeting which is currently underway at the Delhi Secretariat. It is going to be chaired by, it is being chaired by Gopal Rai, who is Environment Minister in the Aam Aadmi Party-led Delhi government. They are going to discuss the way forward as to what exactly needs to be done further, because last time around when Grab 3 was implemented, it was something which was informed from Gopal Rai that if Graph 4 comes into force, and they might also think about the artificial rain. So we are awaiting the discussion and the announcement as well as to what exactly are the things on the agenda which is going to be informed from the side of the government. So in a short while from now, that particular press conference will also be out. But till that time, we are breathing the toxic air, and the situation is going to even deteriorate further, because there is no active western disturbance which is currently being observed from the side of the Met Department. The wind speeds are also low, which is making the situation even more difficult.
Yeah, it's getting more difficult, and clearly if you look at certain websites, etc., they're talking about the AQI levels breaching the mark of even 1,000 in certain areas. We don't know, of course, which ones to go by, but for now, one thing is for sure, that the air quality has plummeted quite a bit, and it's causing a lot of health hazards as well. We have Dr. Vivek Nangia, the HOD Pulmonology at Max Hospital, Saki, joining us on the show to talk to us about just that. Hi, good to be speaking with you, Vivek. Wish it was a better time, but clearly looks like the entire pollution is causing major health hazards. Have you seen an uptick in the patients that you're getting? What kind of issues are people facing because of the entire pollution?
So, air pollution always was considered to be a silent, invisible kind of a killer. But now, as we see, it's all visible now. From invisible to it's become visible, although it's still silent in terms of there's no noise that is being produced by it. But I think the noise that is being produced is actually being produced in the human body in the form of pneumonias, in the form of asthmas, worsening of COPDs. Many of these patients who are coming to us are coming to us with cough, cold, persistent cough. There's a constant foreign body sensation in the throat, and patients continue to cough. In fact, this is also the time of the year when the AQI is so poor that the patients who have an underlying heart disease may just suffer another heart attack. There are studies which have shown that the percentage of cases reporting to the emergency during this period would be going up, certainly. And of course, in the long-term impact, we all know that it reduces our total average lifespan. Quality of life becomes poor. You tend to become more prone to developing infections, allergies, lung cancers, brain strokes, heart strokes. So they can be, the implications of this poor air quality are very far and wide, actually.
Yeah, I mean, this is almost like COVID times. Do you just stay at home? Is that the best possible route, and have air purifiers everywhere? Because not everyone has the option of, moving out of Delhi NCR.
So AQI more than 400 is definitely a hazardous sign, as you rightly said. And this is the time when, when it is between 300 and 400, we usually recommend that people who are vulnerable should not be moving out. But when it is more than 400, then anybody and everybody should be staying indoors as much as possible. And also maintain a good quality of air inside the houses. Avoid carpets, heavy furnishings, heavy bed covers. They all trap a lot of dust. Get your kitchen equipment in order so that there's not much of smoke coming into the rooms. Keep the bathrooms dry and clean. The dampness can also cause pollution. Then avoid lighting these camphors, ovens inside the houses. All that should be avoided completely. People going out for walks is highly disastrous, I would say, because the more you exercise outdoors, the more likely you are to be breathing in more toxic gases and developing complications. So it's very important to go away from the concept of walking outdoors, exercising outdoors. Whatever you're doing should be done indoors, as much as possible.
Maybe it's better to hit the gym at the moment if you do want to do some workouts and take care of your health, because going out and walking might just be detrimental rather than support your health, targets at this point of time. Dr. Nangia, what's your own assessment as to the, timeline that this will persist? Whether this usually every year is a matter of only a few days, or do you expect the impact and implications of this to extend over, few weeks as well?
So it's difficult to predict, but certainly that the AQI levels are not going to settle in the next few days' time. That is for sure. This will definitely take time. But even if you look at historically, the AQI levels during this period of the year remain much higher than the other, the remaining parts of the year, like the monsoons and the summers. But definitely they are beyond the WHO recommended standards at all times. So we should be prepared for a long haul. This is a situation where we should be going in for emergency measures, even if that entails going in for a lockdown of the city for a couple of days, which may help reduce the vehicular emission and public on the streets. One may have to resort to those kind of measures as well.
So, Dr. Nangia, what's the best way? I mean, if you do have to step out, do you wear an N95 mask?
So, basically you have to break down into the air pollution into two parts. One is the particulate matter, which is measured in terms of the microns, the 2.5 micron particle, the 5 micron particle, and 10 micron particle. And then you have the toxic gases. So an N95 mask would protect you from 95 means 95% of the 2.5 micron particles will be prevented from going inside. But a particle size less than that can still go into your lungs, and toxic gases would still not be prevented. But of course, some protection is always better than nothing at all. So I would recommend that, yes, if you're moving out and can wear an N95 mask, then you should wear an N95 mask. If at all, it's very important to move out. Otherwise, stay indoors as much as possible.
The thing, Dr. Nangia, I wanted to talk about with you is how helpful really are air purifiers at this point in time?
See, air purifiers, again, it's something very controversial because we don't have any large-scale studies to say that if air purifiers are being used, then the probability of developing lung infections, lung conditions, allergies, asthma, COPDs would go down. But one thing is seen for sure that if people do use air purifiers inside the houses, especially inside the closed rooms where the doors are completely locked and the windows are sealed, there, at least even at night when they're sleeping for 7 to 8 hours, people who are vulnerable, like those who already have an underlying asthma, chronic obstructive pulmonary disease, where there's already an inflammation going on in the airways because of their primary lung problem. In them, use of air purifiers may reduce the inflammation to some extent and may make them less susceptible to worsening of their symptoms. So they're definitely worth trying. But then again, we must understand that you have to be actually living in sealed environment completely, where there is no transfer of air from outside to inside. That is the only way you can protect yourself, even with the use of air purifiers.
Yeah, perhaps it's time to kind of cordon off the area just around you and back to the COVID times when we were, in a cocoon, in a bubble, in a sealed environment, maybe at least for the next few days till the time the AQI doesn't settle. Do that for your own health. Thank you, Dr. Nangia, for making time and speaking with us today. That's about what the situation is in Delhi and the NCR area. But back to the markets, Sudeep Bandyopadhyay joins us to talk to us about the fundamentals there. It's a bit of a foggy ride as far as the NCR region is concerned, and it's a bit foggy in the market as well because there's no clear visibility as to which side we are headed. But any guesswork there?
Well, Anisha, I think things are volatile and they are likely to remain volatile for the foreseeable future. There are lots of moving parts at this stage. There is a new administration which is going to take over in US, and there are a lot of expectations, rightly or otherwise, from the new administration, which may or may not help different geographies. As far as I'm concerned, I'm of the opinion that the differential tariff is going to help India. The proclaimed policy of the incoming administration is about 60% tariff for Chinese goods, vis-a-vis 10% for most of the geographies. Now, if that does get translated into reality, it will definitely help Indian companies which are looking at export opportunities, particularly in US. So we need to focus on those companies and pick and choose. The other issue is, of course, the slowdown in demand, domestic demand, as far as metro cities are concerned. That's a matter of concern, and corporate results did reflect that. My view is that Q3, which has been a festive season, should show pickup in demand, and Q4 also should be good. So the bit of a slowdown, which did a lot of damage for the Q2 numbers, we probably will cross that hump, and corporate results will start coming back. The numbers will start looking decent. Rural income has already picked up. Rural spending has picked up. So we'll have to wait and watch. The last bit is the inflation. I think food inflation is preventing RBI from going ahead with the rate cuts, but it's a difficult situation with US rates coming down consistently. RBI also should somewhere start cutting rates because otherwise, again, the economy doesn't get the boost which it requires. So at some point of time, hopefully food inflation will be under control with the arrival of the next crop, and RBI should be in a position to look at making some cuts, if not in December, maybe in February.
Okay, that's the take coming in the market. Just want to refresh my screen and showcase whether there's any recovery or not. Metals, yeah, surely they're having a good day. Both Nalco, Hindalco, even Vedanta, they're sticking by with their gains. Even others like Tata Steel are not doing all that bad. Some of the FMCG names are seeing a recovery. Nestle, Unilever are holding on to the green. HDFC Bank has been quite okay. L&T resilient, not definitely in the green, but flattish right now. And Hero MotoCorp has reacted quite positively to its numbers. I mean, to be fair, even on Thursday, going into its numbers also, it was strong. So it's looking okay there. And then M&M continues to hold out by about almost 1% or so. Kunal, is the selling within the auto pack done with, you think? And I mean, cases in point being a Hero Moto and M&M?
Yeah, I think to a larger extent for Hero MotoCorp and M&M, yes, the selling is done. But for the likes of Maruti, Tata Motors, and I think to a large extent even Bajaj Auto, I think the selling would still continue for some more time for many of these stocks, because what we've seen is a volume-based price corrective move for these names. And when you see such kind of a strong corrective move, which initially happens for 3, 4, 5 weeks at a go, and then these stocks come back, trim off 15% to 20% on an average from their previous major swing highs. What happens post that is more of a time-wise correction for these stocks. So which means the two prominent names which fell very sharply in the last 2-3 months, the likes of Tata Motors as well as Bajaj Auto, they are the ones which I believe could be at the further receiving end even from current levels. My sense is that at least on a time-wise correction, we could be looking at the next 2 to 3 months of the stocks going into a sluggish kind of a trend. Hero MotoCorp, on the other hand, the good part about the stock price is that the stock is nearing a breakout back again above its 200 moving average. So maybe another 100 points up move for the stock closer to 48.50 mark. We could be looking at the stock potentially coming back and trying to correct back its underperforming move. M&M has been one of the strongest ones so far, and the stock even in the recent times managed to hold on to its key moving averages. So I think at 2800, 2850 mark, that's also another stock which looks attractive.
Okay, so those are the top recommendations from the auto pack. But Sudeep, what about the PSU sector? Had got massively re-rated over the last couple of years, but this morning as well, the kind of reactions we are seeing in the city gas distribution names, those sudden gas cut allocations which are coming through, causes a bit of a regulatory risk coming back. Do you think it's going to undo a lot of credibility that the PSU as a pack actually had shown in terms of the efficiencies coming back?
The gas distribution is definitely susceptible to changes in multiple decisions by the government. And cut in APM gas allocation has been happening over the last few quarters, and it's expected to continue. And some of the analysts are estimating that by 25, I think the allocation will probably become nil. So one has to be cognizant of that fact and factor in the possibility of price hikes. How much price hike these gas distribution companies will be able to take, considering the multiple constituents and multiple interest groups, including the state elections looming large, is a matter of question. So we have to be a little careful on these areas. I will also put the oil marketing companies in that same bracket, because they are also susceptible to a lot of decisions which the government does take, the state elections and central elections, and a whole lot of things. So if you are getting into one of these areas, as far as PSU is concerned, you definitely need to factor in a lot of change in government policies and decisions, and act accordingly. But there are multiple other sectors where there is I think there's a very good ride which the companies are getting, and I think they will continue. One, I would say, is defense. The other is power. The third is the kind of manufacturing and related areas which are related to defense as well as power. So I think one needs to pick the right PSU company and invest in that. Look at power. I think there is a structural positive run in the power sector, and this we believe will continue in the foreseeable future. So if you are in an NTPC or some of the other power companies or power and ancillaries like a BHEL, I think it's a good bet to be in. If you are looking at defense, well, valuation is something which one needs to definitely consider, but there are fantastic companies, whether it's a Mazgaon Dock, whether it's a Bharat Electronics. I think these are good stocks to buy whenever there is an opportunity for long term. I would also put railway stocks in that same category, but one has to be extremely selective because gaining orders, an order book doesn't translate into valuation. Execution is the key, and one needs to look at efficiency of execution, particularly in railway and defense.
That's the way really to kind of figure out what's happening in the entire PSU baskets at the moment. But taking stock of what's happening in terms of the other pockets in the market, Hindalco continues to be strong. Hero MotoCorp, Tata Steel, HUL, these are the stocks which are holding up. There's BPCL which has taken a knock of around 3% in the trading session today, though SBI is doing quite well. In fact, Naresh, within the banking pack, let's say an SBI, a Kotak or an HDFC, ICICI, which are the strongest names or which is the strongest name that you would bet on?
In the near term, if you were to look at the relative moves, it has been HDFC Bank. The stock made a top at 1780, and we are at 1700, 1710. So it's not taken a large hit compared to the Nifty. So the Nifty is down more than 10%. This is down 5%. Next is ICICI Bank, which again, post numbers did a spike to 1330, 1350, is now down to 1250, but has still not broken the swing lows of the last 3 months as such. And then we come to State Bank of India, which is again holding on to the 770 mark, had recently moved up and now showing some relative strength. But clearly HDFC, ICICI has been the relatively better off names in the banking space. And overall banking has taken a lesser hit compared to the Nifty as such. So that could be the sector which could lead going forward whenever there's a reversal.
Let's get in some BTST trades as well going then on that note. Naresh, what's in your list?
So that would be first a buy on SBI itself. The stock has been showing a reversal signal today. Stop loss at 805, target price of 825. Second is a sell on emphasis, fresh breakdown here. The momentum continues on the downside. Stop loss at 2790, target price of 2700.
Right. Kunal, what about your BTST ideas?
So I'll go with the buy on Federal Bank, one of the strongest name from the private sector banking name, and the stock is nearing a breakout close to the 200 levels. So 206 is a target, stop loss to be kept at 196. And the second is a buy on Indian Hotels, one of the strongest name from the mid cap end. The stock is perched at a fresh 52-week high, very close to those levels. 755 is the target, stop loss at 724.
Sudeep, you were talking about inflation and how it sort of, hits the purchasing power in terms of consumption. But what about FMCG? You think a large part of the selling could be behind us, and can any of these stocks be bought now?
Sure. That's my firm belief that, FMCG has taken quite a bit of a hit. Initially, they had the challenge as far as rural consumption is concerned. Then when rural consumption picked up, they have this challenge in the metros. And that has, very well been factored in the market by the selling which we have seen in FMCG stocks. But my strong belief is that Q3, which is the festival season, will see recovery. Q4 should be good too. Of course, we have to wait for the inflation to come down and ensure that the food inflation is down, and I expect that to happen soon. So under the circumstances, I believe that from a long-term investor's point of view, some of these FMCG companies which are well managed, have a balanced portfolio, should definitely be looked at from long-term point of view. So whether it's a HUL or a Dabur or some of the even other companies, let's say Godrej Consumer, which has a even a global exposure, can be looked at this valuation.
That's the take coming in on FMCG. But Naresh, quickly, a couple of these counters which are buzzing: Godrej Industries, Varun Beverages. What's the recommendation?
So if you look at Godrej Industries, the stock had seen a spike from 900 all the way to 1250. 900, 930 remains a strong support. So overall positive on the stock out here. The retest is done and we've started making a recovery. Any fade off over the next few sessions should be a buying opportunity closer to 950 to 1000 odd levels. Varun Beverages is something which I would avoid given the fact that the stock has shown signs of pausing finally after the last 3 years of non-stop run. We've seen it get into a range of 550 to 650. Unless we start breaking either of the range, it would remain in this range. The risk of a downside remains higher than the upside.
Right. Okay. That's that on Varun Beverages as well. Just looking at the market texture right now, well, of course, metals and FMCG are holding out sporadically. Some of the autos also are. Kotak Bank is holding out well. HDFC Bank is definitely in the green. ITC is looking okay. And today even Bajaj Auto has made that little bit of a bounce of about almost 0.4%. But ICICI Bank, Titan, Tata Motors, Reliance, Bharti, they continue to underperform right now. So many believe that perhaps the time is now ripe to, add positions to Reliance. It's fairly beaten down. What is your own prognosis?
Well, absolutely. I think the Reliance has been really beaten down and definitely deserves a relook. Also, remember, Reliance has a lot of assets which are not being sweated fully, and there will be opportunities for that going forward. Particularly, I would say the defense, not defense really, the shipbuilding related facilities which Reliance has. At some stage, that will come in the forefront, and that also will start giving Reliance a delta. Of course, the individual businesses, whether it's the geo platforms or it's retail or even the new energy business, those things will help in value unlocking for the investors at some stage. One doesn't know when that will happen, but it's a matter of time. The traditional business, there has been ups and downs, particularly in the petchem, but the way things are moving, I think things are improving even there. So while it has been beaten down significantly and one doesn't know when things will really start moving up, but the fact is that if you are a long-term investor and you can bet for 1 year plus, I think it's a good opportunity to acquire Reliance at current levels.
Good opportunity to acquire Reliance, but for now it's quite a bit under pressure. 2.5% cut coming in as far as Reliance Industries is concerned. But let me take it across and get an exclusive news piece that my colleague Anurag is actually picking up. He understands that the FDI and insurance sector is likely to go up, maybe even 100%. Anurag, what's the latest on this one?
Insurance regulator IRDA has sent proposal to government to allow 100% FDI in insurance sector. As per our sources, government is discussing this proposal at the highest level to allow 100% FDI in insurance sector, and we may see during the Insurance Act Amendment Bill also the 100% FDI may also be inculcated in the bill. As per our sources, that 100% FDI is required in insurance sector because insurance is a capital intensive sector, and to achieve the insurance for all target by 2047, capital is required for the insurance sector, and that's why insurance regulator IRDA has sent this proposal to have the FDI limit increase from 74% to 100%. Presently, the 74% limit in FDI was increased in year 2021 from 49% to 74%, and now to increase the insurance penetration and to have a growth in insurance sector, there is a more need of capital, and 100% FDI will give a comfort to the foreign investors also to run their business independently. It's an idea behind 100% FDI in insurance sector.
Okay, that's a big ET exclusive that we're currently picking up that my colleague just talked about. The fact that we are looking at the government, which is discussing right now 100% FDI in insurance. They are mulling raising the FDI limit from the current 74% to a good 100%. Fairly beaten down, the insurance plays. Let's see what transpires out of this and how it actually helps pull them through. The cases in point or the stocks in focus would be the likes of LIC, HDFC Life, ICICI Pru, Star Health, Max Financial, the entire list, and of course the newly listed Niva Bupa as well. Sudeep, what do you like within insurance?
Well, I like this entire insurance space, Aisha, to be specific. But if one is talking about acquiring at this stage, and without keeping in mind this proposed change, which we are talking about allowing 100% FDI, performance-wise and potential-wise, I do like ICICI Lombard. I think it's they are the leaders in private sector in the general insurance space. If you consider the entire space, PSU plus private, I think they're the second largest. The main insurance segments, whether it's a fire, marine, automobile, I think they are leaders or close to being leaders. But the good part is they have a very balanced distribution, whether with bank assurance as well as the distribution channel through agents. Both are functioning very well. The management quality is top quality. And of course, we've seen this management transition also has affected the performance. Overall, I think, I think it does look very good from a long-term point of view. There can be blips here and there, but it's a good buy at current level. That's what we believe. Of course, if there is this 100% FDI, things can improve even further from here.
Can improve from here on, and insurance is a sector that you like at this point of time. So Deep, on that note, we let you go. Thanks so much for making time and speaking with us. Before I take it across to Snehi, a quick last word from you, Naresh, on the market mood. What's the expectation come tomorrow? Are we likely to see some green on the screen, or it's going to be another tiring sideways day?
So given today's recovery in the bank Nifty, etc., I would actually take a punt with a stop loss below today's low and take it as a buy for tomorrow.
The view coming in. With that, let me hand it over to Snehi to walk us through how the day has really panned out.
Absolutely. Let's take a look at how today's trading day has shaped up for us. You have Nifty 0.3% lower, continues to be under that 23,500 level, and it's been there for most of today's trading session. 0.3 lower, a point lower, 70-point cut coming in on Nifty. If you take a look at Sensex also, just in tandem with the Nifty, 0.3% cut coming in over there as well. 77,350 is where Sensex is under that 77,500 level. Let's also take a look at what the broader markets are up to, because initially in the first half of the day, you did have some strength being seen in the mid-cap space. Continues to be rather flat, but very mild positive bias coming in. However, Nifty small cap is down 1% from the day's highest trading point, and right now also down 0.5%. 17,500 is where Nifty small cap is. If you take a look at the advanced decline ratio, slightly in the favor of the decline, so that's where we're seeing some pressure being built in the market. Let's pull up India Wix, take a look at what India Wix is doing, because we did see a spike coming in India Wix in the initial first half of the day. 3% higher is where India Wix is slightly cooled off from 4% earlier to 3% now. Let's also take a look at some individual gainers and losers. You had the entire metal pack that was shining away on the back of that news flow that China is going to be, making its exports more, it would cancel rather export tax rates. So that's the news flow on metals, where metals were doing well for India today. Hindalco was doing well, Tata Steel, you have all of these metals have been shining away in today's trade. Vedanta was also one such stock that was doing phenomenally well today. Hindalco, Hero Moto, Tata Steel, M&M, HUL, Nestle, these are your top gainers on the Nifty. However, what did not do well and weighed on the index was TCS, Infosys, BPCL, Dr. Reddy's, Wipro and Cipla. Let's take a look at some sectoral gainers and losers then. Like I mentioned, top sectoral gainer metal, followed by FMCG, PSU Bank, Auto, Realty, Nifty Bank and Financial Services. All of these are your gainers in today's trade. However, on the flip side, what did not do well was last week's big gainer, and that was IT. It's turned out to be today's biggest loser. A more than 2% cut coming in on Nifty IT, Nifty Media, Pharma, Energy. All of these are in the red. If you take a look at what's done well for FMCG, Varun Beverages, United Spirits, Hindustan Unilever, Nestle, Tata Consumer, Marico, all of these consumption stocks were in the green today. However, what did not do well for IT, a lot of pressure being seen on TCS, because that was 3% lower. Infosys was 3% lower, along with Emphasis, LTI Mindtree, Wipro, Tech Mahindra, HCL Tech, all across the entire IT pack. In fact, all constituents of Nifty IT have closed the day in the red today. This is largely what drew our attention today, but talking about some stock-specific action, Honasa Consumer, first loss coming in 5 quarters. You have Varun Alagh who's saying the need to rethink strategies on 4 or 5 products. So that's something that did not do well. 20% lower circuit lockdown the entire day today. Metal stocks, like we mentioned, were surging. City gas distribution companies, IGL, MGL, they've announced further cuts from the APM. So those stocks were under pressure today. Hero Moto, good numbers, positive brokerage notes. You had Vodafone, good note coming in. Dr. Reddy has recalled their products, so some pressure being seen on that front. But well, yes, that's how we are shutting shop for the day. You have Nifty that's closed below 23,500. Let's see what tomorrow's session holds for us.
If you like this video, then like, share and subscribe to ET Now.